Hello, I'm Anthony Rose, founder and CEO at Seed Legals. Seed Legals is the number one closer of funding rounds in the UK. We do, at the moment, over 50 funding rounds open per week on Seed Legals. We think about 1 in 6 of all funding rounds in the UK is done on Seed Legals. Seed Legals is a legal tech platform that means people doing a funding round in the UK do not need to go to a lawyer. They can do their funding rounds quickly and efficiently. And because of the number of funding rounds done on Seed Legals every week, we've got unique insight into the UK funding ecosystem, which I'd like to share with you in the next few minutes. So, thing number one, the UK ecosystems for startups is booming. When COVID hit, there was a blip. The blip lasted a month or two, and then it picked up again. We're now doing twice the number of rounds per week on Seed Legals as we did a year ago. Now, of course, that just could be our bigger market share, but we think everything we see suggests things are not just on a roll, but actually there's a new sense of optimism thanks to the vaccine and the successful vaccination program. The UK, which was pretty heavily locked down, is now really looking forward to opening up again. So if you're looking to invest in the UK, this might be a good time. I had my first pitch session with the founder on an events business, pitching as if everything was going to be back to normal and they were going to launch reliably in June. Now, maybe that's a little bit optimistic, but I think that reflects the general buoyancy that we're seeing in the UK market. Now, if you're a non-UK investor, there are a couple of things to look out for when you invest in the UK, because its startup ecosystem is slightly unique in the world. And the reason it's unique is because government tax incentives that encourage angel investors. So let me explain. In the UK, there's a system called SEIS and EIS. There are equivalent systems elsewhere in the world, but the UK system is really, really popular. This means a UK taxpayer can deduct 50% of the amount of their investment in a company, up to £100,000 a year personal investment, or 30% of their investment up to £1 million a year per investor, by investing personally in a qualifying company. And the vast majority of UK startups are qualifying companies. And this means the early stage UK ecosystem is dominated, uniquely perhaps in the world, by angel investors investing personally rather than funds. And that leads to a rather interesting ecosystem where, if you compare it with the US, in the US, being an accredited investor is quite difficult. The bar is very high. The legal fees are insane. And as a result, the US has evolved to a system of safes, in other words, a convertible note, done cheap and cheerfully, often without due respect for what's going to happen later, followed by a big funding round later. The UK, thanks in no small part to Seed Legals, where the legal costs are really, really low. It costs perhaps £1,000 or £2,000 to do all the legals for your funding round. That means the UK and the tax breaks combine to investors investing personally in smaller early stage rounds, so you get a huge amount of angel investment. And in early stage rounds, perhaps £100,000 to £300,000, perhaps 80% of all the investment is from angel investors. And of course, that then leads to the usual pattern of VCs later. But that also means in early stage rounds in the UK, perhaps £100,000 to £500,000, the rounds do not have the usual preference shares that you see in other parts of the world, because one of the rules of the SEIS, EIS tax deductions for investors, angel investors, is they have to get ordinary shares. And that means if you're a non-UK investor and you're investing in the UK, when you ask your UK founders, hey guys, I'd like pref shares with anti-dilution, they're probably going to look at you rather strangely, because most of the rounds in the UK up to Series A are either around ordinary shares or something called an A ordinary share with the liquidation preference, which more astute angel investors ask for. So UK funding rounds fall into a few distinct patterns, often driven by these tax advantages. So for a company, they can raise up to £150,000 with this 50% SEIS tax deduction. So you see a large number of early stage rounds with companies raising £150,000. That's your typical angel round in the UK. And then you may have a seed round raising maybe 500 to 700k, and then you may have a Series A round raising £2 million plus. So those would be your standard patterns, with an even earlier stage bootstrap round before that. So one of the things in the UK, perhaps also thanks to Seed Legals and our data that every founder knows, is that companies sell a median of 15% equity in a funding round. That would be the norm. That means you can take the amount the company is looking to raise, multiply it by 5, so the investors get 1 in 6, roughly 15%, and that means you get standard valuation patterns as well. So a company pre-launch might be raising £150,000 on an £850,000 pre-money valuation. Or maybe they're raising £500,000 at a £2.5 million pre-money valuation, post-launch with small amounts of traction. Or maybe once they reached £20,000 a month in revenue, £250,000 a year, maybe they start getting beyond the seed stage, and when they hit maybe £100,000 a month, £1 million a year roughly in revenue, maybe they start doing a Series A at an 8 million plus valuation. So those are your standard UK funding patterns. So of course, with COVID, that's changed the segments that are hot and not. And again, the UK, because of its lockdowns, everything to do with physical events, restaurants is way down, and everything medtech and edtech, traditional strong points for the UK, are way up. So big spikes in medtech and edtech, but that doesn't mean that that's unique. Fintech and a range of other things are also really on a boil at the moment. So one of the other really interesting things to know about the UK is also, thanks to Seed Legals, there's a rise of what we call agile fundraising. So once upon a time, a company had to raise enough money to last 12 to 18 months. Why? Because it took 3 months to find investors and then 3 months to close the round. And the whole thing was so expensive, you didn't want to do it again. So you wanted to raise at 3 to 5 times the valuation, at 3 to 5 times the amount of the last round, and you had to maybe wait at least 6 months to get some traction for things to change to do that. You don't want to risk trading insolvent, so you also need maybe 3 months of money in the bank. And that leads to patterns of a big funding round every 12 to 18 months that we see globally. But in the UK, we've changed that at Seed Legals. The combination of what we call a seed fast, which is the UK version of a SAFE that is known to US investors, or an advanced subscription agreement, as it's also known in the UK, means that investors can invest ahead of a funding round. These are insanely popular on Seed Legals. They start at about £100, and on a rainy Sunday weekend, founders will raise £10,000, £50,000, £100,000 from one or more investors, in minutes or hours. So companies are raising using these advanced subscription agreements ahead of a round. And then they're doing rolling close rounds. Because on Seed Legals, we've made it a one-click option to say, instead of, I'm looking to raise £500,000, but I've got 300,000 lined up, do I wait or do I close sooner? You can, in one click, say, I'm looking to raise £300,000 and top up another 200,000 anytime in the next 12 months. And as a result, there's almost more investment in early stage UK rounds raised out of the round than in the round, which means if you're a non-UK investor, you may well find that when founders are coming to you, they're not waiting to do a funding round, they're delighted to get your investment ahead of a round or top up a previous round with what we call instant investment. So, couple of things to finish off. If you're a non-UK investor and you think of investing in a UK company, few things. Number one, of course, English law applies. English law is excellent. It's heavily driven by what's in the contract. There are no other nonsense things. You don't need notaries and other ridiculous things. Everything can be e-signed online, which is perfect if you're remote. And of course, everything can be transacted on Seed Legals. One of the nice things about using Seed Legals is that, of course, if you're a non-UK investor, you probably don't know, English law and all the common things in the shareholders agreement and articles. The good news on Seed Legals is we not only show you the long form deal documents, but we show you in plain English all the deal terms, and you can jump backwards and forwards in the interface between the key terms. Do I get a board seat? What's the investor consent? What's the dilution? What are the share class rights? And the long form if you want to read the whole thing. So actually understanding what you're signing for UK rounds on Seed Legals is super easy. The other thing to note is, again, as I mentioned, typically investors will get ordinary shares with no preferences or anti-dilution unless you're coming in a later stage round, seed or onwards, or you do a hard sell on the founder to meet your preference share requirements. So one last thing, which is if you're watching this and you're a UK investor looking to invest in a non-UK company, one of those things that few people know is that non-UK companies can offer these SEIS, EIS tax benefits to UK investors as well. And for that, let's say you're an Australian company, you would register as a foreign entity in the UK, which you can do for free on Companies House. It'll take you 2 hours of messing around with forms, but you can do it. And then investors can invest in your company. You can attract UK investors and offer them the same tax breaks as a UK investor would get in a UK company. So if you'd like more, head over to seedlegals.com. You'll find resources, deal data, huge amounts of information on UK funding rounds, and also on the landscape post-COVID in the UK. And if you've got any questions, drop me a note, Anthony@seedlegals.com. Thank you.